Hey guys, David here. Welcome to Digital Outlook. In today's video, we're going to go over Cardano, one of the giants in the blockchain space. And I'm going to show you why Cardano is going to leave a massive footprint. You're not going to want to miss this. So why don't we get to it? So guys, welcome to another Monday. I hope you all had a great weekend. I don't know about you, but it always seems like the weekends go by way too fast for my liking. This weekend, a friend of mine who's really into cars invited me out to join him at a car show, and he let me drive one of his Fast and Furious Skylines with the right-hand drive, so that was really cool. Never had done that before. Met a lot of great people and really enjoyed it. All right, so down to business. Today we're talking about Cardano, and if you've never heard of Cardano before, Cardano is a blockchain-based smart contract platform, and it's mainly competing against Ethereum. It runs on a proof-of-stake consensus algorithm, which is what Ethereum has been trying to transition to since 2017. However, they've been running into roadblock after roadblock and pushing their implementation date further and further back, whereas Cardano has done this, and they've done it extremely successfully. Cardano is classified as a third-generation blockchain because its development is very different from Bitcoin or Ethereum in that it's heavily informed by theoretical and peer-reviewed research before implementation in the software, and that is one of the primary reasons they have been so successful. Now, you may hear Cardano being referred to as ADA, and that is because ADA is the native token of the Cardano blockchain, and it's named after Ada Lovelace, who was a 19th century writer and mathematician, and she's being referred to as the world's first computer programmer. So Charles Hoskinson really liked that. He's the primary developer of Cardano, and he named the native token ADA after her. Something else to note about Charles Hoskinson is that he was one of the original developers for Ethereum until there was a falling out between him and Vitalik Buterin over the future development of the project. And in the end, Charles ended up leaving, but went on to become the creator of Cardano, which has been a giant in this space and has certainly given Ethereum a run for its money. So here we have Cardano's ecosystem, and this is a massive ecosystem. You can see they've got lending and borrowing platforms, various types of launch pads. There's stable coins that are built on Cardano. There's oracles that are interacting with Cardano. Almost all the types of digital asset wallets support Cardano. They have decentralized exchanges, actually quite a few of them, a lot of NFT and gaming applications. Now, if you're familiar with blockchain at all, you're going to know that these NFTs are a really big deal, these non-fungible tokens. So here we have some other networks that are interacting with the Cardano blockchain. Now, this blockchain is constantly developing, and here's an article: 400 new projects and 100K new wallets in a month on Cardano. The number of ADA wallets has increased by 100,000 since March 22nd, 2022, with the total figure standing at 3.268 million as of April the 19th. Activity on the Cardano blockchain is starting to heat up with 400 new projects in the work, along with these 100,000 new wallets being created over the past month. So you can see that this ecosystem is just continuing to expand and develop. So something else to take note of if you've been watching some of my prior videos is this ISO 222 information standard. Well, this standard is going to replace the SWIFT system in cross-border payments. Now, there are only a few digital assets that are even compliant with this system, and one of those is rumored to be Cardano right there. So to me, that's just another indicator of the future impact that Cardano is going to have in this space. Okay guys, well, why don't we take a look at some technical analysis and price action for Cardano. So here we have Cardano up on the daily time frame on Binance, and you can see here that we have been in a downtrend since September back in 2021. So let's just draw our trend line down here, and we'll just take a look at what's been going on. Okay, pull it in a bit here, right there like that. Okay, great. All right. So in this downtrend, you can see we had resistance here, resistance here, resistance here. Then right here, we broke through. We came up here, and now all we're doing is we're testing. We've come back to test this line as support. Now, guys, that's what I would be expecting to see in a downtrend like this. Now, I personally believe that we are at the bottom of this retracement or very close to it. So why don't we drop some Fibonacci in here from the last upswing when we actually broke through this trend line, and I can show you why I believe that we're close to the bottom of this retracement. So here you can see from this low point here, where we broke through that trend line to the top here, we can see that we literally are hitting it right on the 1.618 down here, which for me, guys, is a significant retracement level. So is there any confluence, which is basically, is there anything that's going to support this? So let's just drop in a support and resistance line right here on this level of support, pull this all the way over, and would you look at that? It's hitting right there where we would expect it to hit, right on that wick that had come down where we saw on this trend line, those previous resistance, we broke through right there and it came back, it tested as support, but we also see it's hitting support right on this major support and resistance right around that 39-cent range. So guys, the question is, what's going to happen from here? Well, what I think is going to happen from here is we're going to come back and we're going to actually test this line here again as support before we take off. And I think what we're forming here is just a double bottom right here, and it's going to come back and hit right here. Now, could it go a little bit lower than that line? Yeah, it could. And if it did, I would expect that we would find that support right here. And that is right around the 35-cent range, right in there. But after this, guys, I think it's going to go right back up into some of these higher retracement levels, and let me show you why. Okay, so let's remove those drawings and let's drop in another Fibonacci, but this time we're going to put the Fibonacci on our downtrend. So we're going to go from this very top here all the way to the lowest point here and move it across so that we can look at some of our retracement lines going back up. So if this turns out to be our bottom, which I believe it is, where can we expect to see our next resistance going up in this retracement? Well, here's the 618. That's the golden ratio for these Fibonacci. And let's just drop in a support and resistance line here as well. And look at that, guys. Look at all the support and resistance right in here. This is a major area. So that's right around the 91-cent range. So I think we might see some resistance there. And after that, I think our next resistance point is going to come in here right around, right around the 786. And look at that. Look at all the support and resistance we see in there at that level as well. So that if we once we break through this 618, we'll come up and test the 786. Once we break through that, guys, I think we're heading up here into the 1618, which is up to the, let's see, what is that? About $1.75, somewhere in that neighborhood, right in there. So once we hit that 1618 target, guys, I think what's going to happen, we're going to take a little bit of a retrace and then go back up and surpass it and then slowly go up the stairs until we start making some new all-time highs. Because what I see that's going on here, guys, is we are just in this impulse down right now. And there's your one wave, there's your 2 wave, there's your 3 wave, there's your 4 wave, and we're just printing our 5 right now. And once we print that 5th wave, then this impulse down is going to be over. And I really believe we're very, very close to the bottom of it. And we're going to start stepping up the stairs and going back up the stairs here, which will eventually lead us to those new all-time highs. Because, guys, what I see from the very top to where I believe the bottom printed in, we've had about an 87+% retrace. And from what we saw from previous cycles, that's about the extent. It could be a little bit more, but not much. And then we're going to be making that march up the stairs. Now, guys, this is my technical analysis. And technical analysis is not an exact science. We use indicators that help us to kind of take a look at what could happen. So nothing is guaranteed, but I have a strong bias towards this view. Now, what I'm doing at this time, guys, is I'm accumulating. To me, I see that this is just a buying opportunity. Blood is on the street. And there's an old saying that says, buy when blood is on the street, even if some of it's your own. And the fact is, guys, millionaires are made in bear markets, not bull markets. Millionaires are made by people who buy when it's on the floor and sell when it's on the ceiling. And that's my plan. So guys, this is the video that I have for you today. And as always, I'm not a financial advisor, and this is not financial advice. It's for information and entertainment purposes only. However, if you found value in it, please hit the like and subscribe and tell your friends and family so we can get this information out there. So in the meantime and in between time, stay safe, be blessed, and I'll catch you in the next one.